Hi there folks, welcome to this week's weekly Forex Forecast from Forex Signals. It's Monday the 25th of October. Now, in order to access this, you can do so by going to the forexsignals.com website. If you scroll right down to the bottom of the homepage, you'll see here all our free tools and what have you. If you go to Forex Forecast, click on that, it'll pull up our forecast, giving you our sort of projections and thoughts for the week ahead. Now, if you want to get this sent directly to your email, you can do so. Just fill in the fields there and it'll be sent to you every Monday the moment it has been released. Okay, so let's get into it. Okay, so last week was dominated by a risk on theme. Risk on basically means risk money. Money is flowing into those higher risk assets such as the stock markets, S&P 500, the Dow, all hitting fresh all-time highs. That is risk on. That tends to have upward pressure on the commodity currencies like the Australian dollar, the Canadian dollar, the New Zealand dollar, all showing signs of strength, certainly against the US dollar as well last week and against those low yielding currencies. Remember, risk on tends to have a negative effect on the low yielders, such as the Japanese yen and the Swiss franc. They're known as the funding currencies. So typically how it would work would be is if your big institutions want to invest in, say, the stock market, they would basically borrow the cheapest currency to borrow, which would be the low yielders like the yen and the Swiss franc. They'd borrow those and then sell those on the currency markets to invest in the higher risk assets. That's basically why those currencies come under pressure. And that basically happened last week. This week is going to be dominated really by central banks. Central banks basically decide on where interest rates are going to go. Now, across the developed world at the moment, we're seeing a big up push in inflation. Central banks are mandated to keep inflation, that's basically prices, under control, normally around 2%. Across the developed world, inflation is running considerably higher, over 5% in the US, 3% in Europe and so forth. So it's basically a race to see who's going to start hiking rates first. You've already seen a rate hike out of New Zealand, and all talk now will be that the next rate hike will be potentially in the UK as well. Bank of England getting quite vocal on that. So this week we have central bankers. We have central bank decisions in Canada, where they are likely to be pressurized into maybe easing back more on the bond buying that they've been engaging in, which is an upward pressure on interest rates. Obviously, they can't ignore the huge price rises you've seen in the oil markets as well. So we're expecting maybe quite a hawkish Bank of Canada later on in the week, which could support the loonie. Also, we've got the Bank of Japan out as well. They're not expecting to do much in terms of their asset program. They'll keep their asset buying at the same rate, we think. And then, of course, you've got the ECB as well, the European Central Bank. All eyes will be on that. That's really important because, of course, there is upward pressure on rates there as well as inflation is picking up, although maybe the president of the ECB is less reluctant to start hinting at rates or easing back. Remains to be seen. Let's have a quick look what we're looking at this week. Okay, so myself, I'm looking at carrying on with the risk on theme. CAD yen bias to the upside. Again, don't trade these just off the bat. You need to apply your trading strategies. We do teach trading strategies to get into trend, but the bias for the CAD yen, I think, is still continuing in the risk on theme. We broke through some key levels of resistance, had a pullback, which seems to have now stalled around the 50% of that breakout zone, and now the CAD yen should push higher. The yen is actually starting this week, so far as the time of recording, reasonably quite strong. If the yen does give up some ground as the stocks markets continue to push on, then you can see that currency pair certainly push on to the upside, we would have thought. Also, I'm looking at a certain price pattern going on in the Aussie New Zealand dollar, which is a correlated currency. Both currencies are risk on currencies, both are commodity currencies, but we're seeing some price action here, which is basically showing a rejection of the 50% pullback zone. Bit of price action going in there. Friday's candle really wide, candle engulfing the previous 4 or 5 days worth of candles, negative candle. If that breaches to the downside, we could see a correction continuing on back down to the base of that ascent zone. Max is looking at gold. He's got a bullish bias on gold for the reasons that he mentions there. So he reckons that the price is well within the price equilibrium, easy for me to say, playing out on the higher time frame. So he's looking at that continuing high. You see a nice little uptrend going on there in gold prices as well. We'll rely on the weaker dollar for that to push on. He's also looking at the China 50 to take it on to the next level. Again, stocks going high across the board, and China is no exception as well. And a nice upward channel there, had a bit of a pullback into that trend line support. So he's looking at potential continuation of that. But if you want to read more about that, of course, just download the weekly Forex Forecast, stick your email in there, and of course you'll be sent to you directly, and of course you can get it by going to the forexsignals.com site as well. Right, let's now jump on to the screens, have a look at the economic calendar for the week ahead, and also have a quick look at a couple of charts pertaining to what I've just been talking about there. Come on. Okay folks, let's have a quick look then at the momentum meter. This is my faithful tool that basically tells me which currencies are trading strong and which currencies are trading weak. And as a trend follower, I like to buy the strong currencies and sell the weak currencies. It doesn't predict the future, alas, but it does tell me where the money is flowing at this current time. You'll see here at the moment, you're seeing these commodities, these commodity currencies up here. So you've got the Canadian dollar, the New Zealand dollar, and the Australian dollar. You see the key here down to the left, all showing strength. These are the stronger currencies. This is typical in risk on environment. And the weaker currencies, this is the brown line down here, that is the Japanese yen. So you'll see the Japanese yen down here is the weakest currency on the basket. We've also got the euro down there, reasonably weak and soft as well. I would expect to see the Swiss maybe trade a little bit lower as well. It does seem to be holding up at the moment. But for me, buying these strong currencies like the Canadian dollar and selling the weaker currencies like the Japanese has the risk bias for me to the upside, certainly the path of least resistance. So always well worth looking at this to gauge exactly where the currencies are at the moment, and you can obviously drill this down to lower time frames as well. I can take this right down to the 15-minute chart at the moment. You'll see in the last 15 minutes the US dollar is having a push higher, and the New Zealand dollar is trading lower at the moment. That's on the 15-minute chart. Quite often when you see the lower time frame charts in line with the higher time frame charts, does create some potential trade opportunities if you know what to read. You can of course get your hands on this by heading over to our site should you wish to. Let's have a quick look here at the Australian New Zealand dollar that I spoke about a moment ago. Okay, so this is a chart showing us the Australian dollar against the New Zealand dollar. Now, as we have been talking about in our trading room for a while, this V-shaped correction stalled at the previous level of support, acting as very good resistance, and we had this big pullback. Got down to about the 50% of that V-shape. And this pattern here has really got my attention at the moment. Here you'll see Friday's candle. It is a very bearish pin bar. So a big high wicked candle with the close basically being in the bottom third. This Friday candle completely engulfs the whole week's price action at this 50% zone. Now at the moment, at the time of recording, this currency pair is actually pushing up. However, my eyes will be on a break and a close lower than Friday's low, basically the week's low. If that does happen in the next couple of days, then I would expect to see the completion of this V-shape all the way back down to the 103 level, really, maybe even a little bit lower. But this price action here from last week is key indeed if we break to the downside. At the moment, of course, it's going in the other direction, but that's absolutely fine. I'll hold back until I see a break of that particular formation down there. That's the Aussie against the New Zealand dollar. Quite correlated currency pairs usually. So this is the Canadian dollar against the Japanese yen. As we mentioned there on the momentum meter, the Canadian dollar is showing some good strength at the moment. Obviously, oil prices pushing higher, the risk on theme. Bank of Canada meet later in the week as well, and that's likely or possibly going to be reasonably hawkish in terms of their easing back on bond buying and so forth, and the upward pressure on rates there. So Canadian dollar likely to be benefiting from that this week. And of course, if you're buying the strong currencies, you want to sell something weak against it. And this is the weakest out there at the moment is Japanese yen, although Japanese yen is having a bit of a move to the upside at the time of recording, but this is like a weekly outlook. So we'll see how it plays out. But at the moment, we're seeing this sort of pullback that we saw starting from last week. It's stalling around the 50% of the sort of the breakout zone, and now looking to push on again higher. So I wouldn't be surprised to see this level of support being respected to the downside, and the momentum bias continuing to push this up to last week's high, which from this level is about 100 pips or so. Now, you don't just trade that blindly, of course. You need to apply your trading strategies. If you're trading on the lower time frame chart, whatever strategy you're using to enter into a trend, a pullback or whatever, you need to apply it. But I think the momentum bias for me is still for this currency pair to trade higher, and I'll apply my trading strategies to enter with that bias in mind. Okay, so let's have a quick look then at the economic calendar for the week ahead. Okay, so if you head over to the forexsignals.com website, scroll right down to the bottom, here's where you see all our free tools, as I've mentioned. Look for the Forex economic calendar, click on that, absolutely free. I always like to look out for the next 7 days. Clicking on the next 7 days does that for you. And the correct way to read this, of course, is by looking at the impact column here. Anything in red is deemed to be high impact news, and you'll see here we've got CPI coming out of Australia later on. That's going to be very important, of course, in terms of the inflation outlook. You know, central bankers have to control inflation and are always looking at inflation to gauge where they're going to be moving interest rates, and where interest rates go, normally the currency should follow as well. So we're looking at that inflation coming in year on year at 3.1%, pretty much with all the developed worlds at the moment. Inflation far exceeding their mandated 2% target. So reasonably quiet in the week. We've got a durable goods coming out later in the week in the US, so we'll be keeping an eye on that. Durable goods is basically like your white goods, your washing machines and your tumble dryers and so forth. Normally, you know, an economy that's sort of looking strong basically has strong durable goods. You're not going to go out and start investing in all these white goods, you know, these durable goods, unless you're confident about your job and are confident about you know, the outlook. So that's why we always like to look at the durable goods numbers. Now we've got the Bank of Canada interest rate decision on the 27th. Very, very important. The markets are expecting them to keep rates unchanged. But of course, the Bank of Canada rate statement afterwards is what we need to be paying attention to. Basically looking at the outlook. Are they likely to be you know, trimming their asset buying and so forth? That's likely to have quite a big impact on the Canadian dollar. So even if you're not trading the news, you really need to be aware of these news events that are coming out, so that you don't get caught out necessarily. And of course, we've got Bank of Japan later on in the week as well, likely to keep their interest rates. Look at there, still negative 0.1%, unlikely to move there. But again, we'll be looking at their policy statement. They've already hinted recently in the last couple of weeks or so that there are no rush to basically start increasing interest rates, or indeed winding back on their asset buying. Remember, asset buying, bond buying is negative, has a negative impact on rates. As bond prices go up, yields go down, and so forth. So we'll keep an eye on that. We've got the European Central Bank as well. All eyes will definitely be on the European Central Bank. What are they going to be doing with their interest rates in light of what is happening out there in the US? They may be under pressure to start talking about asset reduction, although Lagarde maybe is less reluctant to do that. So again, keeping rates unchanged, but looking at the policy rate decision. Markets will definitely be watching that for the next clue of where the euro, which is also known as a single currency, also it is the most actively traded currency pair against the US dollar. So markets will definitely be watching that for the week. And of course, the press conference will be keenly attended as well. We've got some GDP figures out of the Eurozone later on in the week, which is good, and we need to watch. And gross domestic product, as I say, and later on in the week, we've also got, where have we got here? We've got these personal income and consumption figures out of the US as well. Again, all giving us clues on where the big inflation number will be heading in the future. So check out the economic calendar, bookmark it, so you have it to hand. Very easy. Even if you're not trading, make sure you're not trading ahead of a big news event, getting stopped out before you've even had time to journal your trade. Okay, hope you found that useful. Don't forget you can subscribe to this weekly Forex Forecast, get it sent directly to your inbox. Just go to the forexsignals.com website, scroll down to the bottom, Forex Forecast. Brings up this page here. You can enter your details in there. That way you'll be getting it the moment it's been released. Don't forget to subscribe to the channel here at Forex Signals if you don't already do so. And of course, if you hit that bell notification, you'll be notified the moment the next video has been released, which, as you know, is a couple of times a week now. You can always come over to forexsignals.com, try us out for a week as well. 7-day free trial, see what you think. We are streaming live up to 6 times a day, looking at trading opportunities and so forth. If that's not your thing, that is not a problem. I'll see you next week. Have a good week.